Hey guys, welcome to this video. Let's cover oil today. Let's go through the whole thing, the whole shebang. Lots of people ask me about oil very frequently. My strategies I do use work very well on it. So if that's something you are interested in, go under this video and get started there. So let's crack on with it. What are we looking at here? So what has happened is literally this. I mean, I've called oil for such a long time on where I like it, where it's going to go for me. You can see you get lots of we say high sentiment. If you don't know what that means, that runs the core of everything that we do at Will of the Trader. But if you just basically look at this, okay, the market rallies from 2021, the 29th of November, from $63. It comes all the way up here. It gets slapped back down March 2022, and then it comes down, and then it comes up, and you can see the movement is far more stretched. Okay, what then happens is a big leg down, a nice stretch again, and then obviously a bounce here. And what the point you get to pretty much is just this one here. So the market begins to get sideways. Okay, teeters around, not too much going on, right? Now that is significant because after all of this comes this slowdown. Now the only other reason for it is if you flick onto your monthly and you look back to all these different levels we're resting on now, okay, and all this previous PA, that's what it's trying to digest. It's trying to eat up that price action, eat up those candles, and that's why it's going a little slowly. So where are we at now? Well, if this was to continue with harsh sentiment, you would see it fly up to the upside. But the problem is it's not. It's bouncing around and it's hitting the same level over and over again. Okay, so very gently it's hitting the same level and it's boring. There's nothing flying out. So you need to make a decision. How am I going to trade this if it comes to the downside? How am I going to trade this if it comes to the upside? What am I going to do to allow myself to make a good decision? Well, at the moment, you're more or less coming to the middle of this sort of price action saga, if you like. Okay, I'll label that with different lines. So at the bottom side of this is the support of the sort of sideways movement. In the middle, you've got your green line here. Now, at the extremes, you're going to get a far better price. If the price does come down to where I've just extended this eclipse symbol, you can take it lightly long. And if it comes up to the top, you can look to short. Now, the reason why is because there's a fairly reactive level along there. If you look to the left-hand side, look at all the price action. Look at the reaction before. Okay, ask yourself, is the price likely to bounce here? Okay, and there's a good chance of it. Now, the only issue with that is that you've hit it several times. So the best thing to do is just drop your size. If you're going to trade either of these boundaries, drop your size, because this can only go on for so long. The market can only go sideways for so long until it starts up again with those massive moves. And that's what we're after if you want to make, more money. So if I swap to the weekly, I've said for a while, $67. It's going to probably rest upon this 200 MA. The 200 MA is raising slightly, which is very handy. But I think you'll beat those lows. I think you'll stretch down and get there. If you do not do that, that's fine, because we can look to short. And we can look to short at key previous resistance, okay, key previous price action levels, as labeled by the arrows I'm drawing for you right now, just up here. There's plenty of it, okay, and that's going to be ideal for short. So short, 84 area, longs, nearer that 200 MA at 66, 67. That's more ideal. That will bring you out of the boring price action, and it'll get you back into that sort of mode where the price is coming up, down, up, down, up, down. If you look before that, you have a period here of the same thing. Look at that. Sideways, sideways, sideways. Boring, boring, boring. But before that is big, 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 nice, stretchy, outy moves. Okay, it's natural. It's how things go. The market has to do it. It has to slow down. The only other notable thing I would say as well, and I did do this on an analysis, if you haven't seen it. I did a stream this morning, guys, as well. Do watch that. The only other thing is that I don't really do patterns. I don't believe in it. It's not for me. It's not how I trade. But anyhow, you can see this is getting tighter and tighter and tighter. Eventually it has to go up there or it has to go down here. Okay, it's not going to go sideways forever. It can't. Eventually, there'd be no movement, and the oil market would just collapse. Okay, no one would be able to make any money with it. So either going to go up, either going to go down. 84 with your upper boundary, 67, 66 area for your lower boundary. That's going to be very ideal for most traders. And I think traders, they're looking at Brent oil as well. The situation for various different oils is more or less the same. But your trading mind just has to remain with what eventualities are going to come. The fact that you cannot have a sideways market forever. Okay? The fact that prices have to change at some point. And what happens is you get tight highs, tighter lows, as you can see right here, and eventually it goes up or it goes down. Now, in with that as well, the better way to understand that is to get your head around how, for that to happen, for you to have a larger move up or down, you're going to need to have some sentiment. Now, around all these times, you had COVID when people stopped driving their cars, you had the Ukraine war and everything like that. Okay, you've got loads of things going on which are going to affect the market, but that's cooled down now. People are far more relaxed about their oil. They're not going up to people's cars, putting straws in them and sucking it all up into their mouths and getting ill. People don't care anymore. They've got an abundance of oil. It's probably going to get warmer in various places in Europe anyway. But just keep an eye on that sentiment, okay? Keep an eye on the sentiment and what is going on around the world, because at the end of the day, that's what's going to cause a big push up. That's what's going to cause a big push down. Okay, and energy markets are obviously heavily correlated to news events that are easy to read. You don't have to be a genius to read between the lines. You might be, you still don't have to be a genius if you're trading FX or equity markets, but the reports are very blatant. It's going to say there is more oil and there's higher demand, the price goes up. There is less oil, okay, and it basically changes like that. Okay, so the higher supply, if the news just says higher supply, obviously less people want it and therefore the price drops. Higher demand, it will clearly say that and the price will go up. It's easy to read oil markets and it's great to train your brain like that, because the sentiment aspect of it, which we're trading in any market, is so clear to be seen and it's so easy to understand. So I think that covers it for now. We've labelled our zones. Trade it lightly. Don't go mad and trade massive areas, massive sizes at 84 or 67. Just take it light. Trade small, trade in stages. And if you want to get on board with myself, go under this video, get my free training, and we will see you there. See you soon, guys.